Hey guys, welcome back. Now that 2024 is a thing of the past, and with a truckload of headwinds soon to be coming our way, all eyes turn to a potentially huge 2025. And the single biggest question and assumption for me is, will history keep repeating? Because if it does, then it won't just be another good year for crypto. We'll be getting the face-melting rallies and vertical blow off top all coming this year. So there's lots to play for, and that's just one assumption I'll be building my personal plan around, for better or worse. And so in this video, I'll be covering my personal plan for this potentially blow off year, including what my current portfolio looks like right now and my personal strategy for $1 million payout this year, when I plan to sell, whether I'll be dollar cost averaging out or doing it in one lump sum, and then I'll finish up with my plan for a second million for the next market cycle. Okay, so first up, let's start with the overall strategy and the asset allocation I've selected for 2025. So starting with one of the most important parts of this whole video, and it's the strategy, as this is where I'll get my assumptions which dictate everything that I'm doing and why. So the first question is, do you spot a pattern? And this is the performance of Bitcoin, and as you can see, it's very clearly one terrible year followed by 3 good years. One terrible year followed by 3 good years, one terrible year, and the assumption being that 2025 is going to be a very good year. Now, we don't know the future, which is why it can only be an assumption. Another way to see this is just in the charts. If you go to the yearly candles, there you can see the halving, the big blow off year, the down year, 3 good years, down year, 3 good years, down year, and this is where we're at. So that's all that is, and we can add in the halvings. There was one in 2016, one in 2020, and one in 2024. And history has shown that the post-halving year is normally very good. Post-halving year, normally very good. So this is the first assumption. So this is the reason why, when you look at my current portfolio, I'm aggressively pushing for 2025. That's the first thing. And then second, it's why I am planning on being out of the market in 2026 because of this pattern, and why I'll be buying back in 2027. So it's this pattern that's my underlying strategy, assuming this year is the year to push hard, this is the year to be out, and this is the year to buy back in. So let's take a look at 2025 this year. As many of you already know, I am now pretty much all in digital assets. There's no real investing in the S&P 500 index funds. There's no gold, silver, bonds, or even cash. I'm aggressively pushing for 2025. And not only am I all in digital assets, I'm all in altcoins as well. So you'll notice no Bitcoin. And again, that's just another assumption that in the post-halving year, altcoins historically massively outperform Bitcoin. So that's the only reason why. So portfolio makes up 50% Solana, about 30% Coinbase. So yes, even though technically this is a stock, I would class it as a crypto, as it's 100% correlated to the market. Then smaller piece in Avalanche and a smaller piece in ENS, Ethereum Name Service. So the most recent change that I did at the end of last year, I had a good chunk that was in Ethereum, and I've just pushed myself further down the risk curve and just moved that piece into Solana. Not that I don't like Ethereum. I think Ethereum is great. I just think as we move into the last 6 to 9 months of this cycle, it's all going up, and Solana's likely to go up faster than Ethereum. But it's my safest bet as it's a top 5 play. Now, the next really important piece is this Coinbase position. So because this is a stock, I was able to get it into a tax-free wrapper. In the UK, that's a stocks and shares ISA. I think the closest equivalent in the USA is a Roth IRA. And since taking the position, it's up like 300%, and I can keep adding to it over the years. So this piece is literally hundreds of thousands of pounds, and it's all tax-free. And this is going to play a huge part when we talk about my second million, because in the next cycle, it's this money that I'll be using 100%, and it'll be completely tax-free. So when I completely sell, as a very rough guideline, half of it will probably be used to buy a property and a car outright. I'll have to pay tax, which is probably this piece, and then this piece will be hundreds of thousands of pounds just nicely sat in cash in a tax-free wrapper. So as you can see, this is a very aggressive portfolio for 2025. Any traditional financial advisor would think this is a bit crazy, but from the first couple of slides, you understand the reasoning behind it. In an up market, this should do incredibly well, but in a down market, this would get absolutely crucified. And even in the pullbacks, this goes down 30, 40, 50%. So incredibly volatile, but that's the risk reward. Huge volatility brings huge upside in an up market, and that's what I think this year is going to do. Now, when it comes to when to sell, a very important question, I have got 3 different triggers that I'm looking at. The first one is a time-based model, and it will be when the market's between April this year and October this year. I'll explain how I've come to these dates in a second. Next one is off Bitcoin's price. So when Bitcoin has 2 times its previous all-time high of 70,000, that gives a 140,000. So once Bitcoin's above that mark, there's another indicator. And then I have a personal portfolio target of between 1.2 and 1.5 million pounds. So that's pounds. I think in dollars it would be a bit more, 1.5 to 1.8. And it would go something like this. Once we've gone past April, if we are in between this bracket and Bitcoin has gone above 140,000 and my minimum target has been reached, then that is when I will pull the trigger and be out of the market. Now, because I've gone so aggressive, I'm all in crypto, I'm all in altcoins, I definitely want to be closer to this date and not this date. This time around, the earlier I can get out of this market, the better, just from a risk point of view. I really do not want to be getting anywhere close to this. So maybe April, May, June, July would be perfect. Definitely don't want to be taking part trying to time the blow off top around October, November. Now, just to answer the question, why these dates? This is 6 months apart, and basically it comes from this. In the 2012 cycle from the halving, it took about 12 months to get to the market top. So that was 3 cycles ago. Then the one after that, 2016, it took from the halving about 18 months. So that was 2 cycles ago. In the last cycle, 2020, from the halving, it peaked out at 12 months and 18 months. We had this double top. So the first one was 12 months, the second one was 18 months, and the third one 12 and 18. So if you put that into dates, it gives you between April and October. Now, everything in this video isn't set in stone. Could it be a little bit before April if we get a massive flush of stimulus? It could. Could this run into November, December? It could. So everything in this video, they're just rough guidelines, just so I've got something to base it on. Now, when it comes to how to sell, again, this is another thing everyone will be doing differently. Now, do we dollar cost average out? Do we just sell at little points, and then if the market's going down, we try and time this peak and we just sell in increments? Or do you just lump sum? Do you just pull the trigger and sell everything at once? Well, when I did a video on this strategy a few years ago now, it was analyzing the stock market. And the data from Vanguard and Fidelity was that more often than not, you make more money by just lump summing in. However, dollar cost averaging makes you feel better mentally because it feels like you're actually doing something, because it's so hard just to sit on your hands and do absolutely nothing. So for me, I will be taking the lump sum approach, as this will be a £1 million payday for me. And also, I don't want any money left in this cycle. I want to be 100% out. So dollar cost averaging, if the market peaks and it starts coming down, I don't want 10, 20, 30% of my money still in the market, because I have a very good use for all of that money. So that is what I'm doing. And I'll answer the question, yes, but what if the market doesn't crash as much this time because of all the institutional adoption? Trying to time this market and buy back in at the very, very bottom historically is not a good idea. So I will answer that question shortly, as it's a very important question. So that's the plan for the first million. Now let's talk about the second million and how this second million, if things go to plan, will be completely tax-free. So check this out. Regular viewers of my videos know and are very familiar with this chart, just showing the different cycles and then where they crash. And from the market bottom, first one from inception went up over 200x, 200 times. It was 230, I believe, from the market bottom. Then diminishing returns, the next cycle did about 130x, so a very steep drop. The next cycle, the one just went, did a 20x from the market bottom. So you can see diminishing returns, diminishing returns, diminishing returns. This is why I'm predicting the market will likely do between a 10 and 15x this time around. That is another assumption of mine, which means that the next cycle, once we go through this crypto winter and it bottoms, I'm predicting that it'll probably do about a 5x from the market bottom. So if Bitcoin goes up to about 200,000, it crashes by 50%, comes down to about 100,000, then in the next cycle, I can see Bitcoin getting to about $500,000. So those are my loose assumptions that I'm working with, a 5x from the bottom. As I'm planning on being 100% out of the market, how am I able to time the market bottom if the market doesn't crash as much? Well, as you can see, there's also another very distinct pattern. From this market top here, it was about 12 months to hit the market bottom. Weirdly enough, from this peak here, it was about 12 months down to reach the market bottom. And then guess what? Lo and behold, from this market top, it was about 12 months again to reach the market bottom. So I'm assuming that history is going to repeat, and it will be about 12 months down to reach the market bottom. So for me, the price doesn't really matter. Once it's gone down about 12 months, that is when I'll be buying back in. One of the biggest changes for me this time around is I am starting now to plan to hit this market bottom exactly. So when I first started in 2017, after I doubled, tripled, quadrupled my money, at this point I thought crypto was over, did not get the opportunity. It recovered, it did another massive run, this time around because I was fully invested and then lost about 70-80% of my money. I was completely broke by this point and never wanted to hear about crypto, so wasn't able to buy. I only started accumulating here and here. So next time around, I'm already planning to have the money to invest at its low point and then looking for a 5x from the bottom. So this would mean that in 2026, I would be 100% in cash, looking to get completely out of the market this year. And then I'll just put the vast majority of the money after buying a property, hundreds of thousands of pounds, into a high interest savings account. That'll be in a tax-free wrapper. That's enough money to live on. This YouTube channel will actually become optional for me. Then it's 2027, around October, November is when I'll buy back in. And next time around, I will only need to invest in Bitcoin. So based on the assumption that Bitcoin will 5x from the bottom, that means with only 200,000, that is all it would take to get to the second million. However, this time it's in a tax-free wrapper, and so the second million would be completely tax-free. So that's very exciting to think about, and only a 5x from the bottom needed. Another option, slightly more risky, would be to use something like MicroStrategy. So in a down market, MicroStrategy is likely going to get absolutely crushed and go down way faster than Bitcoin, maybe an 80%, 90% drop in the next crypto winter, which means from the bottom back to the top, if Bitcoin can do a 5x, then it's very likely MicroStrategy would do a 10x from the bottom, meaning you'd only need 100K in a tax-free wrapper to get a tax-free $1 million. So there you are, guys. Though that is the plan for this year, those are the assumptions that it's built on. We're still very early days in January. Trump has still got until next week before he even gets in and started. So it's all to play for. It's a huge year for everybody watching, and I look forward to riding this wave with each and every one of you. And so, with 2024 now a thing of the past, and with a truckload of headwinds soon to be coming our way, all eyes turn to a potentially huge 2025. The single biggest question for me, and the assumption that I've built my plan on, is will history keep repeating? And for me, the big bet is that it will. And with that assumption, it means this will be a great year for crypto, and in particular, altcoins. My personal plan is a £1 million lump sum out once my targets get hit. It means the next crypto winter will be 2026. It means October, November 2027 is when I'll be buying back in. And based on the assumption that Bitcoin will only do a 5x from the bottom to top, next cycle, it means a 200K investment would turn into the next million, and it would be completely tax-free. Or with a bit more risk, there's an option with just 100K could turn into $1 million with MSTR. Again, completely tax-free. So there you are, guys. Hope you enjoyed. So as you can see, this is potentially a huge life-changing year for me, and probably for most of you as well. And finally, remember, never just copy off one person. I could be completely wrong, and most financial advisors would probably recommend against this plan. However, if you do have any burning questions, then use super thanks below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new super thanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use super thanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.